All right, family, what's the vibes? How you guys doing? How you guys doing? Welcome to another review. I know this is a bit strange because I would not do a review, on Tuesday, but let's see how this week goes. It's very possible that I get to do, a review every day of this week, so just watch out. Right, and I'm also trying to put out videos here on YouTube, as I've been asked by a few people that, they would want more content. So let's see how all of that goes. So today I'm going to be talking about my trades on gold. I'm going to be talking about the importance of sticking to your style. One, style is one. I think style was for yesterday, but more importantly, sticking to your bias, right? And I think we're going to start from there. One of the things to think about is that you don't know exactly what's going to happen, right? And no one knows, right? Not the guru that you listen to, not me, not anybody. Nobody knows exactly for sure what is going to happen, right? What makes us, become better at this or high probability understanding bias and taking trades and having a high win rate is the ability to sit down and actually have an experience with the market, right? So you have been trading for 5, 6 years, like I have been, right? Or you've paid the time because it's not just how long it has been, but you've paid the time to actually look at past price action. Then you can also start to make educated guesses on the things that's going to happen or things that are going to happen, right? That doesn't mean that those things will happen for sure, or even in the way that you're thinking they will happen. And I'm sure this will have happened to you. You made a bias, right, for sell side. You were selling on the day and you still lost money. And price at the end of the day was bearish. And you're like, okay, I had the bias in check, but I wasn't making money. Right. Back to, sometime when I was developing in my career in trading, one of the things that happened was I could tell you everything, just like now, I could look forward and tell you everything that happened in the charts. Our price went to this level and went lower and went to that level and went higher. My outlooks, bang, everything good, but it wasn't reflecting in my P&L. And it's kind of like, okay, if I know the directional bias of what's happening, why am I not making money? Right. And it's because there's a whole different science to actually printing money or to actually making money. Right. And it first starts with doing the things that you know to do and trusting them. Right. So, yes, I talked about, the dollar scene buy side yesterday. Right. And that's what I wanted to see. And I told you guys that, some of these things is based on the things that I'm looking at for fundamentals. And also just looking at how price has played, I really don't think that sell side is what is due right now. This is a bias of me. It's called a bias because there's another side that is probable that can happen, which is it could actually all the way just flush lower. I'm thinking of buy side, and it could actually all the way just go lower. And I did a video yesterday saying, I know I talked about how this level in here is my last level of invalidation, the 4-hour OB before I start to give up on sales at this OB here, I said, I still think, this is still a run into discount, especially because Monday is going all the way lower. It's not all the way. If you look at the what would they call it? If we look at the probability of Monday going lower and just continues into Tuesday, Wednesday, Friday, right? It's actually very, very low. So I still look at this as low to high discount level. We can start to see those buys kicking. And I said, I'm sticking with that bias. What that means, it doesn't mean that price would have to be bearish, or it doesn't mean that price has to be bullish today. It just means that the kind of trades that I'm going to look at would be sell side trades on foreign assets. So on assets like gold, on asset like GU, on asset like EU, I would look for sales. And on GU, just going into the review, on GU, I talked about how this OB is still a level that I'll be watching for. That until we take out a high, I would still be looking for shorts. Right. So now, something very important happened today. We had core retail sales. I sent off those screenshots inside of the channel. If you are not inside of Discord, that's a place you want to be. Right. I don't think there's a better thing to do than being a community of people that do exactly the things that you do. And in the Discord, we have chats, right? And we talk about things that, we're looking to do. I share major information in there, not so much, but something that you can hold on to. I said, do not trade London session, right? Do not trade London session, especially when you have a red folder news release in New York session. Red folder news releases just mean that there's going to be volatility, right, at that time of the red folder news release and after. So that means before the red folder news release, we're bound to see consolidating price action. So if you go and look at gold, right, what happens before New York session? Consolidation. If you look at GU, what happens before New York session? Right. What happens before New York session? We also see a consolidation, right? So where's right? This is 20, and this is it, right? Nothing very significant happening, right? This is 8:15 before we saw, before we started to see any break. This is going into New York session, 7 o'clock. But look at London session. Nothing to write home about. Right. If you're going to make anything out of today's move, it would be sell side, and it started to happen 9:30. Right. So understanding, these gimmicks or not gimmicks, understanding these time frames, right? In terms of okay, when should I trade, when should I not trade, right? Just gives you a little bit, ahead or separates you from everybody else in the pack. It is time and price, not price and time. So time comes before price. Everything can look good and you are just trading at the wrong time. And like I said, the science of making money is different from understanding what price does. Because when you back this, you're probably not putting in question what time it's happening. And if you're not doing that, you should start to do that. So it is, okay, when is this happening? Right? Or when should I be looking to get engaged in the markets? That's the first point. And that's why your news release calendar is very important. You think about, okay, what is happening and when is it happening? Right? If there's a news release or a red folder news release in London session for GU and EU, which happens, right? Then you can trade those pairs in London session. Right. But if you have a major news release happening in New York session, you can just wait because the truth is you'll find better setups there. So I said to say that out there again. So we saw core retail sales happen, right? And this was when dollar was returning back into bullish OB on the daily time frame. See that move, consolidation, drops manipulation, and we have a little bit of push to the upside, right? And that push to the upside allowed for sales with the currency. And as you can see, if you were following on Discord, I was selling gold. I was selling gold. It was at a premium level, a level that you understand. So this is what I'm saying. We have consolidation, manipulation, distribution. Right? I'm looking for this to be smart money reversal, right? If you understand smart money reversal, we start with the consolidation. We have accumulation phase, and we have smart money reversal. Smart money reversal is power of three, where the manipulation leg is running into a higher time frame level. You understand this is a bullish order block. Take our old lows, take our old highs, and we are returning back into that level. Now, what makes this interesting for continuation for buy side will be a close above this high and continuation higher. Right. So right now it's not yet bullish. Yes, we've seen a push away from this, but this can ultimately still go higher because this is an up close candle. But us starting to disrespect this would mean what? Sell side. Again, like I said, the ideas is what you use for utility. Price has bounced inside of a bullish order block, right? At 9 a.m. EST, I am going into pairs like gold or pairs like EU or GU, and I'm looking for sales, right? I typically don't use DXY for gold very closely. Yes, they are diagrammatically opposed, which is if DXY is going higher, gold will go lower, right? But I don't really use that like that, right? You can use that compound formation with GU, EU, and DXY, right? It doesn't really suit so well with gold, but it's the same thing happens, right? If DXY is going to go higher, we're going to see gold go lower. Right. But in this case, I want to see sales for this asset class based on, pure technical analysis. We still have OB inside of here. We've not seen price breach old highs. And going into New York session, right, we took out London's high. This is very important, guys. Listen, right? We took out London's high, right? Very interesting play. We took out London's high, right? This is London's high, 4 a.m. EST. This is Asia's high. So we took out London's high and Asia's high. If you listen to the boot camp that I did, right, I talked about how this point is high premium. This is high premium. This is where you want to be engaging for sales. Why? You want to be engaging for sales here because we don't just have just Asia's high as a draw on liquidity or as a peak on liquidity that we've had. We now have London's high also, right? It's the same thing where we take out Asia's high and previous day's high. It's kind of like what up there in premium. It's kind of like double premium. See it like that, right? You have much more. You have a much more reason for sell side. That's how I want you to think about it. And as the model says, when we run higher, you want to look into the last 3 days. Is there an order block that's standing in premium that we can use? And in this case, there was, right? But as I got to the chart, I was already seeing this. This was already playing out. Price already dropped lower, so I was just waiting for an entry, right? And I was able to find an entry on the 1 minute, right? Which is where I like to engage. It was such a pretty movement today. As much as today in overall was a consolidating day, that period of time where I was engaging, which is again why time is important, was very expansive and was a very, very good day as I shared results also, right? So this was what I was doing, right? Price was already dropping all the way here, right? We already saw price return back into already saw price return back into fair value gap. That's where my stop loss is. So if price is going to be bearish, I want to see up close candle send price lower. There's a fair value gap here. My entry here, right, is based on inversion fair value gap right down inside of here, right? But something much more importantly that I don't really speak about, it is redelivered imbalance, right? Redelivered imbalance is a type of fair value gap in its sense. You can use that same idea, right? But it's something that I'll try and teach on, sometime later. If you've been with me for a while, you know what this is, right? So I was getting into that play right inside of there. Inversion fair value gap, you understand, right? And price closes through that fair value gap, returns back into that inversion fair value gap, and then slides off, right? So my first trade was inside of here, slides off, slides off, slides off, right? Yeah, I think it was a 0.3. I was able to peel out some partial, 8.2. I was able to peel out some partials as we started to take out old lows. Now I got into another trade as price was returning back inside of this fair value gap, right? Inside of this fair value gap, as we saw that break, I put my stop loss all the way at this high. And what happened? Price took me out on that. That's the loss you'd see on the trade, right? I sent that there so that we would talk about it, right? So I sent an update saying I'm covering positions here, right? And I'm taking partials. So I took half of the position here, right? And I took that loss here. So half of the position, I took half of that there and took a loss for the new entry that I got in, right? And as price was rallying, I saw a breaker mitigation block, right? You'd see that inside of here, down close candle before the expansion higher that gets broken through. So we have that run that takes out an old high and gets into that level. So this was a very, very, very critical, interesting sales for me. I got inside of here, boom, right? And as price started to break market structure, it provided another trade. Remember that this is also a down close candle, right? This is why I sold here initially, right? Down close candle, run on buy side liquidity. But one of the things we don't decide is we don't decide how far into premium price is going to run. Right, so the idea is if you're going to sell here, ideally what you should do is you have your stop loss above here. But because there are smaller trades inside of the big trade, I'm taking them very, very nimble. I'm not exposing myself to too much risk. And this is just a trade management tackle. Like I've said, right, there's more to the science of making money than just entries, right? So, but look at that, right? That level is still important. It's not like it's just going to be out again, right? Price is not just respecting it for right now. Now that we have a breaking market structure, right? Now that we have a breaking market structure here, can you see that breaking market structure right from the breaker? So down close candles, write this in your notes right now. Old lows will act as resistance, right, in a bearish market structure. Old lows, when broken through, would act as resistance in a bearish market structure. We can see price take out an old high before getting in there, makes it much more interesting, and then break a market structure. So when we see breaking market structure, it gives us, the life of, directional bias that we want to see, right? Breaking market structure, and I was selling again here. Why was I selling here? I sent the screenshots right as I was selling here because it's a very interesting sell. I wanted you to think about it. Again, old lows, right? When a bearish market structure would lead price into sell side. So we can see price respect those old lows. And if I open up this, you would see that it's exactly the midpoint of that breaker here. Down close candle expansion to the upside. Right now, price breaks through it, right? And it's an entry point, right? So we can see all of that, and price just smashes all through the low, goes to take out Asia's low, right? Which is kind of the model. We already took out Asia's high and London's high, as we've seen, and then expands into Asia's low, right? Asia's low, but there was something else. There was something else I was aiming for, right? And you might call this experience, right? But I've seen it countless times, and that was why my TP was there. And I was really excited about that TP. Right. So I think it's 15 minutes, 15 minutes to show it better. Yeah. Yeah, exactly. Can you see that low down here? Can you see that low down here? So my stop loss is in here, and I've seen this countless of times where price just picks this particular low, right, and leaves this one maybe for a later time before it gets taken out. And here I had 90% of my trades out. So I only have that point one position that I entered from here, and that's what runs lower. I feel like this is something to study. If you look at it on this time frame, you see that majorly it was still really a consolidating day. And why not? Right, we have CPI, sorry, NFP, the big news release happening tomorrow. So we're obviously going to see, consolidations happening on days like this, right? If tomorrow is going to be a big day in terms of expansions, right? The prior day isn't going to see so much expansion. Still just using that same framework that we use, not trading in London, right? And we are now engaging in New York session, right? So subtle things to really understand that can really just change things up for you. So for right now, I'm going to be folding my hands to see what happens. I'm going to see a break going into CPI. What exactly happens? The information is what gives me reason to react. I want to see movement and momentum, and I want to join that momentum. Like you see, price starts to break from that fair value gap. We're seeing breaking market structure, close through fair value gaps. I use those fair value gaps as inversion, fair value gaps as entry. I see close below old lows. I use those levels as breakers, right? And or mitigation blocks, as you might call it, and just engage price like that, right? So for GU, let's go to GU. If you look at GU also, that would have been something interesting, right? And I want to show you something about GU, right? See what GU does. It runs lower in London, going into New York session, we expanded to just shallow run on liquidity above Asia's high and breaking market structure. That's all you want. Breaking market structure. When I was looking at this is what I was looking at. I want to see a close below here, because that's then going to be a level I'll be watching for continuous sell side where stop loss can return back up here, right? But we see breaking market structure, and entry would be OB, up close candle here, breaking market structure, that would be an entry. The entry comes in at 10:45, and you can run that lower. Again, it's not an expansive move, but as you can see, it makes sense. One of the things to pay attention to here is Monday expanded, Tuesday failed to take out Monday's low for GU, right? EU does what? EU takes out Monday's high, right? So we can see EU taking out Monday's high here, right? As you can see, this is Monday's high, this is Tuesday's high. Tuesday takes out Monday's high, takes out that Asia's high properly, and we can start to see that run. So do we see a much more bigger push? We also see DXY take out the low. You should have known by now that EU and DXY are twin like. That's why when you have the divergence on EU and DXY, it's usually a strong divergence because they do the same thing many times. So again, DXY also was taking out Asia's low, right? And previous day's low. So Monday's low was taking out, EU was taking out Monday's high, right? And GU failed to take out Monday's high. So that looks like a solid divergence, right? And let's see if we actually see, continuation for this sell sides happening, right? What I'm looking at, how I'm looking at this is consolidation Friday going into Monday, manipulation Monday, right? And, we start to see distribution going into Tuesday, right? If we're going to see those sales, this is going to be the better pair to engage for sales, right? So this is what I'm watching. This is what I'm looking at, right? And we see how things play out after CPI tomorrow. After CPI tomorrow. All right. I think that's all I have for today. That's all I have for today. That's all I have for today. Trade safe, family, and I'll see you in the next one. Bless.